Hello and welcome everybody. I'm Stephen and I'm a popular investor on the eToro platform. As usual guys, if you could please remember to like this video and subscribe to my channel and leave any comments below. That really does help to spread the reach of my channel. Anyway, I hope you are all doing well, and this video really is going to serve two purposes. So one, I'm going to do a little bit of a summary of what happened in September as a whole, and then I'm going to talk about what happened and some of the key events that happened in the market last week. Well, to get started, September was a difficult month for everybody in question, and I'm sure it was a difficult month for you as well. There was a lot of fears and concerns around a number of different areas in the economy. So one of them was to do with inflation and inflation running very heavily. We also had some supply chain constraints as well, which has been happening obviously during COVID-19. And some of this is having an effect on major company sales, for example. We also had the China incident as well, which although was focused around China in the Evergrande situation, where they are very heavily debt-ridden, there was also some concerns that this may spread out to other parts of the world as well. So this also weighed on the overall stock market. So in the stock market, it may seem like the sky is falling, but it is not as dramatic as that. So what you need to know and you need to have perspective is that 2021 has actually been a relatively non-volatile year. And what I mean by that is that September was the biggest drop in the S&P 500. But if we compare that to previous years, we haven't had a small drawdown, monthly highest drawdown since 2017. And we had much bigger drawdowns in the last couple of years. So actually, it's not been a very volatile market. And as you know, we've hit all-time highs in the S&P and NASDAQ the previous few months, and it's very normal for the markets to take a breather. And obviously there are concerns around inflation, interest rates, tapering, but in the long grand scheme of things, I think this is all noise, because one of the main things is that the economy is starting to do very well. Things are starting to open up again, and company earnings reports are very good. Yes, there are some supply chain constraints, but overall the companies are doing very well, and I expect them to do this in the future. As we move on to our portfolio performance last week, we actually did really well, and we saw a nice bounce back overall in our portfolio. So our portfolio for the week was up about 3.2%. And if we compare that into the S&P 500, which was down about 2.2% last week, and the NASDAQ, which was down about 3.2%, we actually had a really good week. And a lot of that was driven by a nice bounce back overall in the crypto markets, as well as some of our shares, which also performed well against the general markets. So the majority of sectors performed badly, as you can imagine, last week in the US markets. However, the oil sector and energy related companies actually performed really well. And that is because oil prices actually hit a 3-year high of $80 per barrel. This really helped some of our oil stocks such as Chevron, which we have in our portfolio, and Canadian natural gas. So overall, last week, growth stocks actually performed comparatively worse than value stocks. And actually, over the last couple of months, I've actually reduced the exposure of our growth stocks and actually increased the number of value stocks and stocks that pay a dividend as well, which was overall good for our portfolio as well as some of the pandemic sensitive stocks also performed well in our portfolio last week, such as Cedar Fair, which is a theme park in the US, which done well. And this is mainly to do with the fact that Merck, which is a US drug company, has announced that they have a new experimental pill, which the results show that it cuts down hospitalizations and death rates by over 50%. So this was very good for overall for the pandemic sentiment and a lot of these pandemic sensitive stocks going back to normal business operations. There's also been some concern over the last couple of weeks about a potential federal government shutdown. And some of this was alleviated last week when President Biden actually signed a short-term spending bill. However, there has been no progress made on extending the federal debt limit. And this has been something that has been discussed over the last couple of weeks, and some people have some concerns about. But I think that the chances of the Federal Reserve actually defaulting on its debt is very unlikely, and it's very likely that over the next couple of weeks that they will come to some type of solution. There's also been a delay on the $1 trillion infrastructure plan. And on Thursday, it was actually voted to actually delay this for a period of time, because there was a lot of people that actually wanted to link this to other key policies that they want to put in place for education, environment and healthcare. So this should be delayed for a small, short period of time. There was also some inflation data released in the US called the Personal Consumption Expenditure. And this actually showed that inflation was actually up over 3.6% from the previous year. And a lot of this has to do with the supply chain issues that we've had since the start of the pandemic, which has grown worse over the last couple of months. We also saw this highlighted by some of the earnings reports released last week by Bed Bath & Beyond as well as Nike, and there were delays that were impacting their overall results. We also saw some really good data last week released from the US, which showed that personal spending had actually increased by 0.8% last month, and that was compared with consensus estimates of 0.6%, which shows that people are starting to spend more money overall in the economy. As we head over to Europe now, overall the European indices were actually down last week in line with the US. There was also some data released last week as well, which showed that the year-on-year consumer prices had actually increased to 3.4% last month, and that was compared to the previous month of 3%. So it's showing that the prices overall of consumer goods are starting to go up and inflation is starting to take effect. And this is the highest monthly increase in consumer prices since September 2008. The ECB President Christine Lagarde also presented to the European Parliament in which she said that inflation figures had gone above the overall target. However, they expected those to normalize over a period of time and for them to fall into line with their overall targets. The Bank of England Governor Andrew Bailey also made a statement which he said that he didn't expect for British GDP to actually get back to its pre-pandemic levels until early next year, and that they were monitoring to see how the economy progressed over time. We also saw oil prices last week hit a 3-year high at close to $80 a barrel. And a lot of this has been exacerbated because we see a lot of queues at petrol stations in the UK and around Europe as motorists are finding it very difficult to fill up their cars with petrol. And this may have an overall effect not only in the oil prices over the next couple of weeks, but may also weigh on the market overall. And we've also seen some governments over the last week or so, and they've actually been discussing bringing back some power plants that were actually not currently operating in order to be able to fill some of that energy gap. So as we move on to China now, so last week I talked to you in depth about the Evergrande situation. So I'm not going to go over the background and the details overall, but there was some good news that came from Evergrande this week. And I think it's starting to play out as I expected it to. So I expected that China were going to support them and that there would be a slow but steady and planned sell-off of assets in order to reduce the amount of debt. And last week it was actually announced that Evergrande had actually sold a 20% stake in Shenzhen Bank for $1.5 billion. Which does help to reduce some of that debt. And I expect over the next couple of months for them to continue to sell off not only assets that they have, but also, pieces of land and urban development areas that they actually hold on their balance sheet. So I expect that to continue over the next couple of months. Last week, the Chinese government also stated that they wanted to keep the housing market as healthy as possible. And I saw some really interesting data last week from China that really made me think about how overheated the real estate market has actually got over the last couple of years. So the data that I saw was that the real estate market, that over 20% of properties throughout China have actually not been lived in at this current time. So that shows that speculation is rife in China, and that people are buying properties purely because they expect the price of those properties to go up, and then they sell them on for a profit. And what actually happens is a lot of those people that are buying those properties are actually buying them with debt, and they're actually borrowing a lot of money from the bank. So if the price does not go up of those properties, they have a really big threat of being defaulting or having liquidity issues, which will force them to sell at distressed prices. There was also some rumors, but nothing confirmed, that the Chinese government are considering reducing the reserve ratio requirement again. And what this really is the amount of money that a bank is required to be able to have available to meet the requests of customers. And by reducing this reserve ratio requirement, this actually allows more liquidity to be able to move around the economy. As we move on to the top 3 performing stocks of last week, and in number 1 is a company called 𝗱𝗶𝗀𝗲𝗃𝗃. And what this is a group holding company which holds a number of airports throughout France. And we've seen an increase overall in air traffic around Europe, and a lot more people are going on both business and on personal travel. And this has seen the flying numbers increase, which has been good overall for this stock as of late. Second best performing stock in our portfolio is the Compass Group. And this is a catering company which is listed on the UK Stock Exchange. And this has done very well because it is a pandemic sensitive stock. And I think the news from the Merck development on finding the new drug that will reduce hospitalizations by 50% has actually helped to increase the price of this stock, because it assumes that more activities are going to go back to normal over a given period of time, which will be good for the stock. The third best performing stock in our portfolio is Canadian Natural Gas Company, which increased by about 4.4% last week. And we know that there has been a shortage as of late of natural gas and oil, which has increased the prices of those commodities, which has been very good for Canadian Natural Gas Company. As we move on to crypto now, and what a roller coaster last 6 months or so that we've had. So we saw in May 2021 that Bitcoin went to its all-time high of about $64,000. And then after that period of time, we then had the news of the China ban on mining. And what that meant is that miners had to stop mining for Bitcoin within China, and many of those had to migrate to countries around the world. And we had a big drop off in hash rate, and subsequently over a period of several months, that hash rate has now got back to almost close to what it was before the announcement by China. So it just shows how anti-fragile Bitcoin is, because that hash rate now has been spread around the world. And I actually said at the time that I considered this to be a net positive in the long term, although it would have some short-term pain, because now we will see that the network is much more decentralized because it's spread out in more geographical locations. But importantly as well, to do with these ESG concerns, I think that the mining of Bitcoin now is a lot more environmentally friendly, using such things as renewable energy resources. So this is a very good thing for Bitcoin. As I mentioned over the last couple of weeks, that I expect every time that China comes up with some rhetoric around increased regulations or clamping down on cryptocurrency, that is going to have less and less effect over time. And this was actually proved last week, because the cryptocurrency markets actually did very well last week. And we actually saw Bitcoin, which was up about 11% for last week, and Ethereum was up about 15% for last week, and Bitcoin at current time of this video is at about 48,000, and it's really threatening to break beyond that 50,000 key psychological level. And I think that, as I've been saying over the last couple of months, I expect Q4 to be a really explosive quarter. And I expect us to go past all-time highs within the next couple of months. So it's a really exciting time to be in crypto. And I think you can see that the demand for cryptocurrency is going up. There is a lot of interest, not only in the general public, but also in the media as well. And we're going to see more and more interest over the next couple of months. There was also a really interesting question that was actually posed to Jerome Powell, who's the head of the Federal Reserve, during a Federal Reserve meeting. And he was asked whether the US planned to put any ban or have a clampdown on cryptocurrencies, similar to what China has done over the last couple of months. And his answer was no. They didn't expect that to happen, and it's not something that they want to impose or to do. But they want to make sure that cryptocurrencies and companies within the ecosystem are following the SEC regulations. We also saw 2 companies in Singapore being granted exchange licenses last week, and one of those was Independent Reserve and another one of those was DBS. And this really shows that in Singapore they have a really pro cryptocurrency stance, and they are really pro innovation. We also saw some important news from the SEC, and they have decided to extend the deadline on 4 Bitcoin ETFs that are currently under process. These are expected to have an overall result in November, because most of these cannot be extended any further. So a decision will be made in November. It is important to note that there is 2 types of Bitcoin ETF. So the first type is there is a futures Bitcoin ETF, and this is something that has been approved previously in other countries such as Canada and in mainland Europe. And the second type is a physically backed or spot type of Bitcoin ETF. And this actually requires that the company, when you are buying Bitcoin, that the company have the same amount of Bitcoin actually in their reserves. And it is considered very likely that the SEC will approve the Bitcoin futures type of ETF. However, it is more unlikely that a physically backed or spot ETF will be approved. But we will see what happens when they make their decision in November. Anyway, I think whatever happens, it will be very good for the market. We've also seen more and more Bitcoin move off exchanges recently and move over to private wallets. And as I've said previously, this is a very bullish sign, because the more Bitcoin that goes into private wallets, it actually shows that over the long term, they are much less likely to sell their Bitcoin as they would if they were on exchanges. And last week, we actually saw a reduction of the amount of Bitcoin on exchanges by the equivalent of about $330 million last week. And over the last month, we've actually seen that number reduced by about $3.4 billion in equivalent of Bitcoin. So this is a very bullish sign that people are not wanting to part with their Bitcoin, and that holding strong, and they're also expecting an explosive Q4. Thank you very much for listening to my video today, and as usual, if you have any questions, don't hesitate to let me know. Also, please join my Discord and my community group We have a really great group of people which are always having really great investment discussions, and we have a lot of fun in there. So please join. The link and the invitation is below. And I want to say to you, have a nice week ahead, and remember to hodl.